Right. So mock number 3. So how will you all rate those who have done it? I mean, those who are joining freely, you guys will get access to the mock paper. But those who have done it, can you all give me a rating? Where does it stand? Is it if I give you a scale of 0 to 10, where 0 is easy and 10 is very hard, where will you rank this paper? 6. What about the others? Where will you rank this paper? Yes, I can share it. Done. 7, 5, okay. Rest of you? Where will you all rank? What is the ranking you all get? 6. Yeah, Chaturi, I'm just checking what has happened. Yet to get an update, should be able to send it to you within the day. Right? 35 really bad at this point. So for mock number 3, I would say not good, not bad. Right? Because, you've just done 2 mocks, right? Obviously, mock 5 onwards, you should be getting good marks, right? 4, 5, starting with 4, then 5 onwards, I believe you need to start hitting those 60s and 70s, 60s and 70s. 60s would be uh, also good, right? So from mock number 4, 5, keep an eye on the marks, because mock number 2, 3, you guys basically learned quite a lot, right? So now it's about applying those learnings, understanding where you are lacking. So I saw in your one-to-one chats, the biggest problem was your refresh theory, right? So I'm again reminding you, OCS is a game of 70-30, right? 70% you can play around with your theory, 30% will be rest of your applications to, you know other aspects of it, right? So 70% it will be theory. So what I observed in most of the one-to-one discussions was your marks were really poor, because you have not basically uh, either attempted the question, because you don't know the theory, right? Because you don't know the theory. Okay, Zahid, your one-to-one, where does it stand? Let me check. Okay, just talk to our admin team, Zahid, because I think your one-to-one is yet to happen, right? Okay, yeah. So try to complete that as soon as possible, right? Next week also, you guys will have one-to-one session, either from mock 3 or mock 4, right? So get ready for that as well. So I'm sure everybody here may not have completed up to mock number 5, right? So yeah, we'll come back to that, Amil. Specific areas, we'll come back to that, right? Okay, so today we'll try to do 3 and 4 also. I'm trying to complete both 3 and 4 within the first 2 hours of the free session, so that those who are joining newly also will get some understanding. We'll try our level best. If not, let's see what can be done, right? Yeah, okay. Yeah, I know there'll be a little bit of an issue. Okay, Chaturi, can you basically, your one, I think it was done. I've got an update saying it was done, but let me check again, right? So don't worry about that. If you had downloaded and sent it to Nanaska, that would be fine. They would mark it and send it to you, right? So please attempt mock 4 tonight. Those who have not done mock 4, right? And then mock 5 later. So we'll come back to the timelines in our usual session. So today I will on the first 2 hours, we'll do a review on mock paper 3, and if there's time, we'll do mock paper 4 as well, right? Okay, section 1. Now I want you guys to contribute more, right? Because I want you guys to answer I want you guys to basically contribute a lot and interact, especially when it comes to the mock discussions, right? Because you have to answer it on your own going forward. So I want you all to come back with your ideas, inputs when we are doing the mock reviews. When we are doing the mock reviews, right? So senior management team is keen to ensure our marketing spend is as effective, and I have given some marketing cost details of the marketing budget. Has suggested using zero-based budgeting. Okay. So what is our current budgeting system? What is our current budgeting system? Anyone? We more or less use a incremental budgeting system, right? We use a incremental budgeting system. So at the exam, there will be a definite question asking from switching from incremental budgeting to another system. It could be zero based, activity based, rolling budgets, whatnot. So you need to know about all those systems, because there is a question I see examiner will that is a question I see the examiner will throw at you, right? So you need to know the pros and cons of incremental budgeting, and then know in detail about zero based budgeting, activity based budgeting, rolling budgets, and beyond budgeting, right? This will be basically a definite question in one of the variants. So incremental budgeting, you know the pros and cons. In addition to that, you need to know about zero based budgeting, activity based, rolling budgets, and beyond budgeting. These aspects of budgeting, right? These aspects of budgeting, right? Okay. So how can zero based budgeting would be applied to the marketing budget using some of the cost items listed in the reference material to illustrate the explanation? So now we are trying to use zero based budgeting. Question is, how can it be applied to the marketing budget? These are the expenses you have. These are the expenses you have. So how can you apply it to the marketing budget? How can you apply it to the marketing budget? So what is the first stage in zero based budgeting? Those who are joining newly, I'm just giving you a quick update on your answer format. So always, right, what we propose to in terms of your answer structure is you understand the exam requirement, understand the ER, right? Accordingly, you structure your answer. So a minimum of 3 points are required for each exam requirement, but then again, that depends on the marks weighting, whether it's 60%, whether it's 40%. So for all both, you can't write 3 points each. For 60% one, you need to write at least 5 points. So accordingly, you look at the weightage of the marks and then decide how many points you are going to write. So each point you give a subheading, and under the subheading you write about 3-4 lines explaining your subheading. Under the subheading you write about 3-4 lines, right? So this is the structure we normally propose when you construct your answer. So stick to this, because this is very clear. Examiner knows that you have understood the question, that you are addressing quite clearly onto the exam requirement being asked. So it's going to be very easy for the examiner as well, and you're going to give a neat presentation of your answer to the examiner, which is good. He can't be going through your paragraphs and searching for answers. He won't do that. If you do that, I mean, if you try to write everything in one paragraph, you're asking for trouble, because examiner is not going to read each and every word and look for the answers. No, you need to throw out the answer to the examiner in a way that examiner, in the first look itself, he or she is able to grasp that you have addressed the exam requirement, that you have addressed the exam requirement. So to do that, the method proposed is this: you give a subheading, under the subheading you write about 3-4 lines elaborating what you told. So in most of the mock papers, what I've seen is this part of it is very poor. The explanation part is very poor. Why is that? Right? You don't have to basically go around the subheading you're giving. Be very specific to the point, right? So if I am to give a subheading here, okay, as part of the first step, I say identify activities related to the marketing cost. Let's say that is my subheading. So what should I write under that? What should I write under that? Right? I would say the first stage of ZBB implementing ZBBs to identify the activities, and the main activities would be, and I will list down these activities. What are activities? Salaries, advertising, market research, promotion. That's what is given to us. Right? So that will be my first sentence. Right? Then I will say, okay, the budget will be split to these activities, right? To these activities, whereas each cost driver of these activities will be identified, which will drive the cost. Right? You are basically identifying, okay, what is the activity that is determining staff salaries? What is the activity that is determining advertising cost? Right? And then the third sentence will be, of course, it will be the marketing manager's requirement to see, right, whether the activities identified are necessary, and are there any alternative ways of conducting those activities. That's it. So that's my first point. Under zero based budgeting, I first do the activity identification thing. That is the first stage. Basically, you identify, I say the first stage of ZBB implementation is identification of the activities. And the activities are, you tell the activities given in the pre-scene, right? Then you say, okay, then you look at the activities basically and see what are the alternative ways available. The budget will be split by these activities, and then you say, okay, what are the alternatives available in getting these activities right? So the marketing manager has to make a call, do a cost benefit analysis on each of these activities in terms of what are the alternatives available. So that's what I have to give my explanation on. Right? That's what I have to give my explanation on. Be very specific to the point. Don't write any unnecessary points, any unnecessary content in your answer. That is the first point. Okay, so having understood your activities, identified your budget split, staff advertising, salaries, research, likewise, then what is your next step? What will be the second step? Yes, what will be the second step? What will you develop? What did we learn last time? Develop, what do we call it? We learned this decision packages, right? I'm repeating this again. We learned these decision packages. What is a decision package in zero based budgeting? Can someone tell me? What is a decision package in zero based budgeting? Basically, if it's staff salaries, or let's say if it's market research costs, a decision package will give you alternatives. Alternative 1, 2, 3. Right? It will give you basically it will give you different ways of achieving the objective. My objective is to get a market research done. How can I get it done? Either through my in-house team. Then I do a cost benefit analysis if it is to be done in in-house. If I am to outsource it to a research company, I do a costing and see, okay, what will be the costs involved in this case. Right? If I am to hire an external consultant to the business, and if I want him to get it done, I map out the cost. So different ways of doing the same thing, achieving the same objective. Then what will I do? What will I do? Yes, I'll try to basically see what is the decision package which is achieving my objective, and the associate cost with it. Right? And the associate cost with it. So these could be either incremental or mutually exclusive, each and every alternative. So I'm trying to see, to achieve the same objective, what are the alternatives available and what is the relevant cost. And finally, I do a review of my decision package. Right? I do a review of my decision package and I finalize what will be the course of action taken, what will be the activity done to achieve my objective. It could be outsourcing it. Maybe that is the cheapest option while giving you the necessary result. So these are basically the three main stages in a zero-based budgeting approach. Right? So accordingly, once you review the decision package, do the cost benefit analysis and finalize finalize the alternative, you basically allocate resources to it and budget it in your annual budget. So this will be the three main stages in a zero based budgeting approach. So basically you've got to refer to the cost items given in the reference material and start explanation and give your explanations and give your explanation. So this will be the structure of your answer for part 1, how zero based budgeting can be used for your marketing budget, right? Is everybody clear on that first part of it? Can I have a quick heads up on the chat box? Is everyone clear on the first part of it? What about the others? It's very simple, right? Don't make this complicated. You understand the ER, address your points according to your ER, according to exam requirement, right? Okay, sorry. We need to focus more on our branding aspects to ensure we capitalize on the higher demand in the seasonal months where there's a relative higher demand for outdoor grills. Need to improve our brand identity and value so as one of the premier organizations selling outdoor grills in Beelan. I'm sure we'll need some more focus on our branding in making this happen. What actions do you suggest for us to improve our brand image, which would ultimately ensure we reach our objectives? So I want you all to give some actions. What should we do to improve our brand image? What should we do to improve our brand image? Can I have some answers? We are already an established regional brand operating in Beelan. We have some operations, a little bit of operations in other countries as well through third party agents. So, in that context, what needs to be done, so that what are the activities, actions that needs to be done to further basically improve our brand image? Improve our brand image. Can I have some answers? Yes. Get customer reviews. Very good. What else? Basically, you're taking customer testimonials. You're giving the new customers some assurance. Look, here, they've done a good job. Customers are giving them positive reviews, right? Social media marketing. Okay, so be very specific. What are you trying to do via social media marketing to improve the brand? I want that. I want that. Right? What are you trying to do through social media marketing to improve the brand? Okay, a customer service, improving your customer service, good, because we are a product that after we sell the product, our responsibility is not over. We have a warranty, we need to honor it. When customers come with errors or defects in the product, we've got to attend to them in a very friendly way, right? Our customer service has to be really great, right? So that is another good thing. Customer reviews, a good customer service. What else? What else? Being eco-friendly by using recyclable packaging, good. Yes, you can basically stand out from your competition, right? Open an experience store, very good. Yes, you can do that. So endorsement from influencers, yes, you basically need to sign up with proper parties who can promote your brand, right? It could be a YouTube reviewer, it could be a social media influencer who is into this food and beverage side of it. Likewise, you've got to identify the proper party, then affiliate him to the brand. Maybe have a brand ambassador. Right? Things like that. Good. So all these points are valid. You can include them in terms of improving our brand image. What further practices do you think needs to adapt to capitalize on the benefits associated with the digital tools and techniques? What further practices do you think our marketing team needs to adapt? So, in terms of digital marketing, what else should we do is the question. What else should we do? Can I have some answers? What else should we do by making use of the digital tools and techniques in marketing? Digital marketing, right? Okay, you conduct surveys that could be very important for your product design aspect, especially for your R&D side of it, right? But look at more towards the marketing side of it. From the marketing side of it, what can be done, right? It could be to promote sales, to drive traffic to the website, to improve our brand. So what can be done in terms of marketing using digital tools is the question. Right? So Chaturu, your answer is valid more or less towards R&D, not marketing. Right? So in terms of marketing, what can be done using digital tools and techniques? Okay, you come up with pop-up banners, right? So maybe you can, Lorica, you can say that under social media marketing, right? You can put Google AdWords to pop-up banners to pay-per-click advertising to whatnot, right? You know, ad banners in popular websites, right? Of course, yes, you can gather customer patterns, right? Accumulate some data, analyze the big data, and see, okay, what can we get out of this? Very good. That's a valid point. That's a valid point. Since we don't have a dedicated R&D team to assess customer needs, this would be a very valid point. This would be a very valid point, right? So Tiran, Facebook would come under social media marketing. You can have one point as social media marketing and say what are the things you could do via social media marketing. Again, be very specific to promote our brand, right? Then big data on gathering customer patterns, good. Then we looked at yeah, what else? Then search engine optimization, right? Very good, to identify segments, basically to touch our main target segments. Search engine optimizations. Then you can do something, do personalized marketing, either through emails, right? Either through visits, right? You basically identify, or you partner it up with a outdoor program, outdoor event organizer, try to get a database and follow up, a personalized marketing approach, right? So you can do many things using digital tools and techniques in your marketing. Using digital tools and techniques in your marketing, right? You can do many things. So these are just few what we discussed. If you can give me three and justify it, I'm happy to give you full marks, right? I'm happy to give you full marks, right? So remember, minimum number of points for any question should be three. For any question, minimum number of points should be three. Remember that, right? Unless there is a specific theory which you can break it down only to two. If not, if you want to say something, at least go for 3 points. That should be your practice. That should be your practice, right? So any questions on section 1? Can we move to section 2? Can I have a heads up that everybody is clear on section 1? Good. Section 2. The IT admin service contract is to be renewed, and we are assessing alternative suppliers in addition to the current supplier we are working with. 3 suppliers shortlisted, have different pricing structures, not very clear at the moment as to what is the best option in financial terms. Explain how we could decide under the different risk attitudes using data in the reference material, identifying what decisions would be using each attitude. So what are the 3 risk attitudes to decision making? What are the 3 risk attitudes to decision making? You have risk averse, you have risk neutral, and you have risk seeker, right? So this way your risk is high, this way your risk is low, this way your risk is low. So now have 3 subheadings: risk averse, neutral, seeker. Under those 3 subheadings, state, okay, who is a risk averse, 1 sentence. Then what is the decisions he will make? What is the decision he will make by looking at these numbers? By looking at these numbers, right? Okay, risk averse, what will be the decision? Will he go for 1, 2, or 3? Where will a risk averse person go? Where will a risk averse person go? So look at this also. What is coefficient of variation? Your standard deviation over the mean or the expected value, right? This is a percentage. So higher the percentage, risk is also high. So a risk averse person, Are you sure he will select 3? 3 is the highest risk package. 3 is the highest risk package. So will he select supply 3? No, a risk averse person would be supply 1. Okay, he will look at where can I get the best cost, right? Where the risk is also less. Now, it's true that he can get the best cost under supply 3, but a risk averse person will not select it. The risk is really high there, 15%, as opposed to 5% in option 1, right? The risk component you are bearing additionally for $1, he will not be motivated to go for supply 3. He will stick with supply 1. Risk neutral. What will be the decision? Risk neutral. What will be the decision? Okay, I've told you, even when we did the mock one discussion, what is the technique a risk neutral decision maker will be basing his decision on? What is the technique the risk neutral decision maker will be basing on? What is the technique? Okay, more than the payoff table, we've learned one specific technique. What is the technique? What is the technique? Expected value. Risk neutral person will go for the expected value, right? He will go for the expected value. Now I am sure you guys told me supply 2 because the expected value is, that is the best expected value, highest expected value. Is that the reason? Chaturi, Sampath, then Lorika, is that the reason? I mean, basically you're getting the best expected value, which is the decision of a risk neutral decision maker. So is that the thinking behind your answer? Yes or no? Is that the thinking? Yes. But what are we looking at? Be very careful. I know you guys have made this mistake, right? What are we looking at? Are we looking at a cost or are we looking at a revenue? What is this? Are these costs or revenues? Cost. So which one should you look at? Highest expected value or lowest expected value? Basically the best. When will your expected value be the best? When you have the lowest expected value. So risk neutral person will select supply 3. Will select supply 3. You're getting the best expected value, right? Under supply 3. So be very careful. Read the question. You guys have not read the question properly. It is the IT admin service contract, meaning it's a cost for us. We have to pay them. So in that context, we are trying to pick the supply which gives the best cost under the expected value. Risk seeker. Risk seeker. What is the answer? Risk seeker. Risk seeker. Is he an optimist or a pessimist? Can you answer me that question? A risk seeker. Is he an optimist or a pessimist? He's an optimist. He's thinking best of the best will happen always. So what is the best of the best in this case? Supply 1, 2 or 3. Irrespective of the risk. Whatever the risk is, he is going for the best option. Right? So in that context, what is the best supply? Again 3. He is giving you the lowest cost. Supply 3 is giving you the lowest cost. Right? Irrespective of the risk, you are an optimist. You want the best to happen. The best happening is where your expected value of cost is less. Where your expected value of cost is less. Right? So did you all understand that? Right? So this is the second time we are doing a similar question. I don't think we'll have time to revisit it again. So learn it here itself. Right? Risk averse, neutral, seeker. First, you need to identify whether you are deciding on a cost or revenue. Whether you are deciding on a cost or revenue. Right? If it's a cost, you go for the lowest expected value. If it's revenue, you go for the highest expected value. In this case, it's a cost. It's an IT service contract. We go for the lowest. That's why we selected supply 3 For risk seeker, he wants the best of the best to happen. When will the best of the best happen? When you have to incur the lowest cost for your IT service contract. For your IT service contract, which is supply 3. Which is supply 3. Is everybody clear on the first question? Is everybody clear on the first question? Yeah? Good. Yes, what's the question? Others, can you quickly update me whether you are clear on the first part of the question? Can't we get that thing based on coefficient of variation? What do you mean that thing? The decision? Is it the decision? Yeah, that also you can. He will go for the highest risk. So basically, who has the highest risk? Supply 3. Supply 3. Right? Who has the lowest risk? Risk averse? Supply 1. Risk neutral, we'll go for expected value. So it will be supply 3. That way also you can pass into. No problem. Will the expected value always given? Most of the time it will be given. Most of the time it will be given. If not, like Pasindu said, you can compare and see with your coefficient of variation, standard deviation, and things like that. But in most cases, in almost all the cases, expected value will be given, because risk neutral person will be depending on the expected value. Will be dependent on the expected value. So that's why when we discussed expected value under P1 refresh theory, I wanted you all to know about, okay, what are the limitations of expected value? Because most of the cases you will be given the expected value, because even be it a decision tree, your decision will be based on expected value. So you need to know what the technique is, the pros and cons of the technique as well. Right? Exactly. So for risk neutral, always go with expected value. Always go with expected value. And Sampath, be very careful. Read the question and understand whether it's a cost or a revenue. Whether, I mean, in the last example we did under mock 1, it was revenue. So here I have given you cost. Right? To see, some of you have misunderstood it as well. So be very careful. So take everything as a learning, right? Take everything as a learning. The more mistakes you commit, the more you learn. So therefore, don't worry. Correct it from the next paper itself. Correct it from the next paper itself. Right? Okay. Part 2. Limitations of this analysis in selecting the IT admin service provider. So can you tell me some limitations of this analysis? We use expected value, right? We use coefficient of variation to decide the IT admin service contract. So what are the limitations of the analysis we just did in selecting the IT supply? In selecting the IT supply, what are the limitations? Can I see some answers? Yes, now this is IT contract. Should we only look at these financial numbers, or should we look at the qualitative aspects? That is a huge limitation I see. You need to look at the history of the service provider, his capacity, his expertise, his past track record, how long has he been in the business. So we are ignoring all those qualitative factors. We are trying to base our decision on some estimates, some financial estimates. That is one. Ignorance of qualitative factors. Then relying on estimates. Those are estimates given, right? There is subjectivity involved in the construction of the numbers. So we don't know to what extent your estimates are accurate, right? We don't know to what extent the estimates are accurate. What else? Also the risk indicators used, like coefficient of variation, right? Expected value is simply a long run average, right? So you take your coefficient of variation by dividing standard deviation over the expected value, right? So the numbers here again are a question because it's mostly estimates, right? So you talk about those limitations under the IT contract. Okay, when it comes to the IT contract, what are the limitations? What are the limitations, right? So when we are also considering outsourcing this, then there are two contracts and a decision tree is given. How the decision tree can be used to make a decision to which contract to choose. Limitations of using the decision tree to make the decision. So we have a decision tree here. So it's either contract 1 or contract 2. Contract 2, what is your cost? Straightforward, $22,000. Contract 1, what is your cost? So you find the values at point A, B, multiplied by the probabilities, get the expected value at point C. That will be your expected value for contract 1. Expected value of cost for contract 1. So 0.6 into 23, here it's 22,600. Workings have been given to you. Here it's 17,320. And then here it is 21,325. So which one will you select? Contract 1 or contract 2? This is the expected value of contract 1. Right? This is the expected value of contract 2. Which one will you select? Contract 1 or contract 2? You will select contract 1. Right? You will select contract 1. Right? So you basically have two subheadings, contract 2, contract 1. Contract 2, straightforward. You can say the illustrates the decision about which contract to select. If it's contract 2, the cost will be 22,000 for 6 months, irrespective of how much production or licenses that are required. But if it's contract 1, it's complex, right? Cost will depend on two sets of factors. What are the two sets of factors? What are the two sets of factors? Yes, what are the two sets of factors determining the cost of contract 1? What are the two sets of factors determining the cost of contract 1? Now you have to say those things. Service requests and what? Good. And licenses. Yes, very good. So these are the two factors that will drive your cost. That will drive your cost in contract 1. So you have to say that. You have to say that. Right? Okay, so you basically explain this part of numbers, right? Explain these numbers and say the expected value of contract 1 is 21,000, and you will select the contract. What will be the selection? You will go for contract 1 where the expected value is the lowest. Where the expected value is the lowest. So what are the limitations of this analysis again? What are the limitations of this decision tree analysis? Can you all tell me some answers? What are the limitations? Using probability, which is again subjective. What else? Use of probability, which is subjective. You're ignoring qualitative aspects. Very good. Very good. Right? Again, you are using expected value, right? So you can talk about the limitation of expected value as well regarding the accuracy of estimates. Regarding the accuracy of estimates. Right? So those are the basic limitations under the decision tree. Right? Under the decision tree. Right. Are we clear on section 2? Can we move to section 3? Any questions here on section 2? Is everybody clear? Can I get a heads up that everyone is clear on section 2 for me to proceed to section 3? What about the others? Right. Section 3. Customer loyalty app and the CGMA cost transformation model. Draft a briefing paper how we could determine the cost per unit of the new app. Difficulties associated with doing this. So we are trying to come up with an app. What is this app for? Customer loyalty and membership, right? A customer loyalty app, which we currently don't have, right? Standalone app, already been developed and tested, specialist app development company. We have paid 69 Apps Incorporation $500,000 for the development and testing, and will pay a royalty fee of 0.2 each time the app is downloaded by our users, by our customers. App will be hosted on our own servers. We will need an upgrade alongside our other apps website, and will be maintained by our own IT team. We'll use push notifications and text messaging to connect with the customers, have multiple functionalities such as claiming points, discount coupons, and even a payment platform. Right. So it's a fully fledged customer loyalty and a membership app, right? So how can we determine the cost per unit of the new app? How can we determine? What will be your answer? How can we determine? Basically, when you take a product, what are the two main types of cost? When you take a product cost, what are the two main types of cost? Okay, exactly. It's direct and indirect, right? Not variable and fixed. It's direct and indirect. So under direct and indirect cost, depending on the cost behavior, it might be variable or fixed, right? So you have two subheadings: direct cost, indirect costs. Say how we could determine the cost per unit of that, right? So under direct cost, what will you say? You say what is direct cost? Cost items which can be directly traced to the cost. Will directly trace to the cost object, which is our app, right? Indirect cost which cannot be traced to the single cost object, right? So you'd say direct cost. What are examples for direct cost in this case? What are examples of direct cost in this case? Can I have some answers? Yes, royalty fee. Very good. Royalty. Development cost. What else? Yeah, payment for 69 ink is the development cost, right? Then your royalty fee, right? What else? Server upgrade cost. Very good. Server upgrade cost because we need an upgrade here. Server upgrade cost. What are the indirect costs? What are the indirect costs? And what about here under direct? What about maintenance cost? Maintenance cost, updating cost will also be a direct cost, right? You can directly get it to the basically identify it to your product, to your app. Then what are examples for indirect cost in this case? Very good. Cost of the IT team, because some part of their time will have to be allocated for this product, right? Because they will be working on other products as well, right? Yeah, maintenance cost is direct. Maintenance cost is direct. IT team cost is indirect. What else? Right? Yeah, the cost you'll have to pay for your whatever the SMSs to push notifications to whatnot. That depends on the customer requirement. If the customer subscribe, you will get those things, right? So that will be another cost. What else? Right, so there's basically you say what is direct cost, indirect cost, give some examples. Look here, this is how we could establish the direct and the indirect cost. You have to cite examples, otherwise this is very difficult to understand to the examiner what you're trying to say. So therefore that's why I broke up into two: direct cost, say what is direct cost; indirect cost, say what is an indirect cost, give examples. This is how we could determine the cost per unit of that by considering these and these costs, right? So what are difficulties in arriving at this cost in doing this exercise? What will be the difficulties? This same question was there in your last exam window, right? So I'm not sure to what extent it will come this time, but better to know it. I'm sure it will be there in one of the variants. So what are the difficulties in costing this? What are the difficulties in costing this? If it's direct cost, you can identify what has been already paid directly. But few other costs depends on the main number of downloads, number of users, number of subscribers, right? What are the updates that is going to come to the app, which you can't anticipate, foresee at the beginning. So you'll have to keep on updating your maintenance, ongoing service costs, which is a problem. Those are difficulties that will make your costing inaccurate if you don't properly factor these things, right? Yeah, indirect costing, when it comes to the sales team, they are using the sorry IT team, the expertise service is used for other aspects as well. So how do you decide which part to apportion to this app? Then your web server cost, how do you decide to apportion to your app, to the cost to your app, right? The server depends on how many downloads, how many sessions are there at a given point in time, things like that. So basically depends on the capacity of the server which is dedicated towards this set, which is difficult to establish, uh, even though we say that will be part of our costs. So it's difficult to establish those things, right? Exactly. The useful life is not clear. We don't know how long this app will last to either amortize it accordingly, right? So therefore, those are the difficulties. Those are the difficult. I mean, when it comes to things like apps, they continuously get updated. We don't know when the update has to run. If there's a competitor doing a change, we'll have to incorporate that change. So we can't anticipate it prior. Very difficult to anticipate it prior, right? So those are the difficulties. Those are the difficulties. Right. Then the CGMA cost transformation model, you have these three aspects, right? Endangering a cost conscious culture. Everybody is conscious about cost, right? You know where the cost is arising, right? You know the detailed breakdown of cost, you know the cost drivers. So you're cost conscious. You are trying to make sure cost is minimized. Managing the risk inherent in driving cost competitiveness. You're trying to minimize any risk involved in the operations that would drive cost competitiveness. Then understanding cost drivers, accounting and systems and processes. So can you explain how these three areas apply to our distribution center? So you have three subheadings under these three and talk about how it applies to the distribution center. Right? Talk about how it applies to the distribution center. So cost conscious culture, how will it apply to the distribution center? Basically, everyone involved in a production to distribution facility from the directors to the manager, right, should be aware and conscious of the cost being generated, right? Basically to distribute our grill range, they have to be aware what are the costs involved, right? Then they need to have regular meetings, communications, informed about performance, encouraged to participate and share ideas so that this cost is managed. So basically, CGMA transformation model is about getting the participation of all to achieve the respective objective. In addition to these three, there are a few other aspects of the CGMA cost transformation model, which is there in your P1 refresh theory. You can refer it. But in these three areas specifically, how does it apply to our distribution center? Right? It's very easy, right? You can just look at the point and say, okay, how can we mitigate the risks in the distribution center? How can we make people understand about the cost drivers and systems and processes? Educate them, inform them, communicate to them, right? Then risk inherent, you need to manage any risks associated with cost reduction. To reduce your cost of distribution, you might switch to a third party, entirely a third party. So far, for the retailer channel, you're using your own vehicles, right? You might switch to a third party. So when you're switching to a third party, what are the risks that are coming? You need to be able to list them out and have proper action plan to manage and mitigate those risks, right? Those are the basic areas that you've got to cover. Basically, this point you elaborate as to how it would be relevant to our distribution center, right? As to how it would be relevant to our distribution center, right? So that's nothing much there, right? Any other questions relating to section 3? Any other questions relating to section 3? Right, section 4. What are the implications if we are to move into ABC? We've discussed this a lot. So tell me the implications. So when you say implications, right, they haven't specified positive or negative. Talk about both. What are the adverse implications, positive implications, right? So you segregate it into two, maybe like the pros and cons, right? In terms of that, you need to specify if we switch from absorption to ABC, what are the implications? Implications will be the positive ones and the negative ones. So can you tell me the implications of switching to ABC? We've discussed this quite a lot, right? Improve pricing decisions, good. What else? What else? Better performance management. Okay, you know what is driving cost, you know what are the activities, right, where you can make people more accountable for cost control. Good. What else? Guys, quickly, I want everybody to come up with a point so that we can move faster to mock number 4 as well. Okay, what is the implication on planning? I want you to be specific again. No general points, right? Yeah, no overpricing or underpricing decisions. So, Sampath, you can tag that to your first point. Better pricing decisions, right? So, same thing, right? So, Fazlan, what is the implication to planning you are referring to? Be very specific, right? Be very specific. Okay, better resource allocations in planning. Good. Yeah. So, be specific like that, right? What else? Okay, talk about the negatives of it. So we've talked about the plus points. What are the negative points? Right, better decision making. Yes, good. What are the negative points? Time consuming, difficult to determine the cost drivers. It's complicated, right? Expensive to operate, right? You need to highlight those aspects. Highlight those aspects, right? Okay, that's simple. Impact on our pricing strategy from moving to ABC. What will be the impact on our pricing strategy? What will be the impact? It gives us insights into cost behavior, which allows us consistent pricing adjustments, right? Accurate breakdown of cost, right? We get to deploy a more consistent pricing strategy with minimal fluctuations, minimum changes, right? Likewise, talk about how our pricing strategies will be impacted, right? 3 points there would be more than enough, right? Right. One of our junior officers has done a costing based on ABC for the electric grills and charcoal grills. Compared it against the current absorption costing, which I will forward. Why are the costings different when the ABC is upright, and what are the reasons for the difference? So, why is the costing different? Why is the costing different? So, it says why are the costing different when ABC is applied? Right, so maybe you can give one line on the difference between absorption and ABC. You start with that and then say, okay, why activity based costing versus absorption costing? What is the reason for the difference? So under absorption, charcoal grill is 39, electric is 53, but under ABC this is 34 and this is 60. So you can see the change here, right? So what is the deviation of cost? What is the percentage change? Here it's about 13%. Your cost is changing by about 13%. Then here also it's about 13%. There is a change. So 13% is not a small amount, right? So here you are over costing by 13%. Here you are under costing by 13%. You are under costing by 13%. So what is the reason for this difference? Can you highlight? What is the reason for this difference? Simply, what can you say? By the looking at it, two different products, right? Okay, indirect cost or basically your overheads are causing the difference. What is the reason for the difference? Why is the indirect cost giving us a difference? Absorption cost uses general overhead absorption rates. Good. Then what does ABC use? Then what does ABC use? What does activity based costing use? It uses cost drivers based on actual based on the activities. It assigns the cost into the product using cost drivers based on actual resource consumptions. Driver based unit cost, very good, based on actual resource consumptions. So out of these two products, which product is using more resources? Is it charcoal grill or the electric grill? Which product is using more resources? Electric grill, right? We all know electric grill is using more resources. So obviously that is that is reflected where you have a higher cost in terms of ABC, lower cost in ABC compared to right. Sorry guys, so I hope I'm audible and visible. There was a small interruption. Right? So basically, we see that electric grill is being undercosted, charcoal grill is being overcosted. So charcoal grill is using lesser resources compared to electric grill. right? So with a flat OAR, we see that electric drills is under costed. So that's why under ABC, cost is higher because electric drill is using more resources, whereas charcoal grill ABC cost is lesser because it's using lesser resources. So that's basically the main reason you are observing a difference in the costing. You are observing a difference in the costings. That's the only difference, right? So that's what you have to highlight to the examiner. So first talk about absorption ABC, then say absorption versus ABC. What is the difference in the costing system and what is causing the difference? That's what you have to highlight. How overheads are treated basically. Absorption cost treats as a general OAR and applies to all the products irrespective of the actual resource consumptions. Whereas ABC takes an activity based cost driver based on the actual resource consumption to allocate cost to the product. Right? And because of the difference in the resource consumption patterns of the charcoal and electric grills, we are seeing a difference in the ABC cost of those two products. Right? So that's about section 4 and mock 3. Any questions on mock 3 or in section 4? Can we close mock number 3? Any questions, any clarifications related to mock number 3? Was everyone clear? Especially those who are joining for the free sessions. Are you guys clear on the approach you've got to take in attempting a question? Or basically in addressing the exam requirement? Yes, answers will Kanchana, you will get them. Right? So I suppose you guys have submitted your details, your emails and everything. So you guys will be emailed the free mock papers, which is you get about 3 mock papers, the paper and the answer that will be sent to you. If you don't get it, drop a message on the Telegram OCS support group. Our admin team will attend to it, right? Yes, if he does not specify whether it's positive or negative, if he just say the word implication, talk about both sides. Right? If he just says implications, you've got to talk about both pros and cons, the positives and the negatives. You have to talk about both, right? Others, any questions? So see, from each and every mock, you've got to learn something new. Otherwise, it's not going to be productive. Right? So if you had done this prior, the approach you take, how you structure the answer, how you address the exam requirement. So you've got to learn something from each and every mock we discuss, from each and every mock we do the reviews. Right? So that has to be the objective. You guys have to get something out of it. Right? So please make sure you get that out of every mock discussion. So this time I'm trying to cover all the mocks in the discussions, which is taking some time, but let's try to complete it as much as possible, right? So therefore, learn something new from each and every mock review we do. Right? Yeah. Others, any questions? Can we close mock number 3? Right. Switching to mock number 4. I'm sure some of you here may not have attempted it, but in the interest of time, I've got to review it, right? I've got to review it in the interest of time. So please don't wait without attempting it. Even after the review, you can attempt it, no problem, right? So try to finish it today. After today's session, do mock 4, finish it off, right? Do mock 4 and finish it off, right? Okay. So we start with 2 events. Explanation on the 2 events above and how will it affect the financial statements for the quarter end, right? Yeah, let me share the paper on the chat. Done. Right. So event 1, event 2. Just say whether it's adjusting or non-adjusting and the justification behind it. So event 1, is it adjusting or non-adjusting? Okay, first of all, what is the relevant accounting standard in this case? What is the relevant accounting standard in this case? IAS 10. You need to start off with that, right? Always remember, when you get a question with regards to your F1 financial accounting events after the reporting period, yes, good. So you've got to start with, give a reference to the respective accounting standard, and then start your answer, right? So fire is non-adjusting. Event 2, because it did not have any conditions of existence at the reporting date. That's what the standard tells. Event 2 is adjusting because there was evidence, this case was running, we might have put some provisions. So it is an adjusting event, right? 3 KPIs to monitor the performance of our suppliers. Justification why each KPI suggests is appropriate. So we have some problems here. Issues with the key supply of steel. Steel is one of our key raw materials. We can't afford to have any problems in the steel procuring process, right? Not conforming to standard. There have been quality issues, range from non-conformance, resulting in significant number of returns to delays in delivery, resulting in production holdups and delays. Been asked by Jones to make some suggestions about KPIs. So what will be the KPI to monitor performance of our suppliers? Very good. Quality control rating or quality control score, right? Quality score of the raw materials delivered. That will address the quality issue, right? Lead time, good. That will address the delays in delivery, good. So remember, your KPI has to address these issues, right? Defect rate, good. Not conforming to standards, right? There are returns, so there are defects. So defect rate, very good. Lead time, defect rate, then what else? Quality control score. What else? What else can we say? Supplier availability is not a KPI actually. Maybe you can take supplier response time as a KPI. Basically, it should be available to answer your queries, right? Supplier response time. Good. So make sure when you get a question like this, there are problems in the unseen, you give a KPI to address those problems. We have quality issues. How did we address it? Quality control score. We had delays in delivery. How did we address it? We put a new KPI, lead time. We had returns due to defects. We put in a new KPI, supply defect rate. Right? Likewise, make sure you address the problems in the unseen by the answers you give. So from the unseen itself, you can get the KPIs. Simple as that. From the unseen itself, you're getting the KPIs. Nothing new, right? And you justify why that is appropriate. Basically, we are facing a quality issue, so our quality control score will be appropriate. It'll give an eye opener to all the suppliers. Look here, now they are measuring us in terms of quality control. We have to stick to it. If not, we will lose the supply contract, right? Explanation of Kane Steel's working capital position. Any risk associated with this position? So now we are trying to replace one of our key steel suppliers. If the current issues are not sorted, we have a new supplier where we have been given the information. So what is the question? Explanation of the working capital position. Any risk associated. So how will you explain these working capital positions? So talk about inventory, receivable, payable, and your revenue and cash. So you'll have 4 subheadings there. Inventory, what can you say? Inventory, what can you say? Yes? Yeah, you compare with the industry standard and say, so what has happened to inventory days over time? What has happened to inventory days over time? It has decreased, maybe due to the rapid growth we are facing. Rapid growth in revenue, can you see? A rapid growth in revenue. And we don't have cash also. Our cash is deteriorating. So basically, due to that, our inventory days have come down. Then what about our receivables? What has happened to the receivables? Receivables have gone up. Basically to finance this growth in sales. You are selling more of credit, which is a risk, right? At the same time, receivable days high, meaning as a supplier's point of view, is it good for us or bad for us? From the supplier's point of view, his receivable days are high. So from our context, is it good or bad? It's good for us because we are their customers. So their receivable days are high, about 2 months. So we get about 2 months credit if we buy from them, right? Then payables have grown. So inventory is coming down, receivables are going up, payables are going up, revenue is going up drastically. What is that called? And cash is deteriorating. What are these a sign of? What are these a sign of? Yes, not aggressive. If we are aggressive, we should have cash, right? There is no cash. Cash is worse, right? From 800 positive, it has gone to 600 negative, right? These are signs of, have you heard of over trading? Basically, these are signs of over trading. High revenue, high debtors, high payables, less inventory, less cash. Over trading. You are unable to finance your rapid growth, right? You are stuck somewhere, and you might go bankrupt anytime because you are having a huge working capital issue. You're having a huge working capital issue, and your numbers are way below your industry average. Way below your industry average, right? So that's about payables. You don't have cash to pay your payables. That's why your payables are increasing over time. Payables are increasing over time. So what are the risks associated? So you talk about the working capital position. Then you take what are the potential risks of this supply. If we select him as a supplier, what are the risks we have to face? Can you tell me some answers? Can you tell me some answers? What are the risks we've got to face? Yes. What are the risks we've got to face? Liquidity problems in lack of cash, disturbance to continuous supply. That is the main thing. He is our supplier. His inventory days are coming down. He doesn't have stock to supply us. Is it uh, going to be a good decision for us to select him? No. The risk is we will run short of stocks. We will run short of steel stocks. So steel is one of the main key raw materials input for our production process. So if we are going to play haywire with steel, our entire production is going to get held up. So this is going to be a big problem. The risk is being unable to fulfill our steel requirement. That is a risk. Then again, over trading, liquidity problems. If we start to work with him, we don't know when he might go bankrupt. He doesn't have cash. His receivables are high. Payables are high. Inventory is deteriorating. So if we select him, there is a huge risk of him going bankrupt and we having no access to any steel supplies. We having no access to any steel supplies. So will you take him as the supply? Will you take him as a supply? Yes or no? No. Right? You talk about the risks and within one line you can give a conclusion to your answer saying, look here, based on the above, it's not advisable to go ahead with cane steels. Cane steels. Right? There is a risk to revenue. Yes. Right? So that's how you address that question. That's how you address that question. Right. Section 2. Has directors asked to review the non-current asset register and identify assets to be disposed. I have identified 2 assets and one asset needs reconditioning, continue to be retained with us. Whether the 2 asset disposals will need to be reclassified as assets held for sale, impact of the disposals to the financial statements. Explain how additional expenditure on reconditioning will be treated. So go to your reference material, you have 3 assets. Asset 1. So you have 3 subheadings. Asset 1, 2, 3. Right? So what is the relevant standard being tested here? IFRS 5 asset held for sale and IAS 16 property, plant and equipment, and IAS 16, property, plant and equipment. So asset 1, can you classify it as asset held for sale? Yes, will be sold, buyer already found, likely that equipment will be sold. So it meets all the criteria under IFRS 5. You have to say that it meets all the criteria under IFRS 5 and we can classify it as asset held for sale. So upon classification of as the asset as held for sale, what will happen to the asset? What will happen to the asset? What will happen to the asset? No depreciation. Depreciation will cease and it will be not shown as non-current asset. Right? It will not be included in the property, plant and equipment. So depending on the cash received, your cash will increase by 100,000. Then asset 2. What will be the accounting treatment for asset 2? Buyer not yet found. Anticipate it will take at least 12 months to find a buyer. Expect that a sale will happen in 2023. Expected sales value is this. Where will you continue asset 2? Can you classify it as held for sale? It will not be classified because it does not meet the held for sale criteria. Does not meet held for sale criteria. Right? But, right, it says 12 months, right, to find a buyer. So at the, now we are in October. In December, can we do it as asset held for sale? Now October, 12 months from October will be, of course, not held for sale. But in December, if you are to classify it as held for sale, I mean in December 2022, your accounts will be finalized somewhere in February or March. So at that point in time, can you recognize as asset held for sale? It says 12 months to find a buyer, at least. Right? Sale will happen in 2023. That is also there. So we are not telling firmly to classify as held for sale. We are saying we are giving a conditional clause. But if in December, if you classify it as held for sale, right, what will be the accounting treatment? What will be the accounting treatment? What do you see here? What do you see here? Yes? What do you see here? You see a IS 36, you see an impairment where your carrying value exceeds the recoverable amount. What you can recover from the asset is only 125,000, but the same asset you're carrying in your books at 220,000. So you have to write off 95,000 as impairment. You have to say that also. This examiner will be looking for that answer. Right? You have to write off 95,000 to your income statement as impairment. Right? Good. Asset 3, how will this be recognized? How will this be recognized? There is a reconditioning cost of $70,000. It's going to increase capacity and extend economic life. So will it be a revenue expenditure or a capital expenditure as per the clause of IAS 16? Yes. Will it be a revenue expenditure or a capital expenditure? It will be a capex. It will be a capital expenditure. It will be a capital expenditure, right? So you will be measuring this asset by adding this 70,000 and deducting any additional depreciation you are incurring for the year, right? And taking out any additional depreciation you are incurring for the year, right? So the increased depreciation charge will be added to your P&L, will be added to your profit or loss statement, right? That is very clear and straightforward. How does a feed forward control differ from a feedback? What is the difference? Simple difference. Feed forward, feedback. What is the difference between these two systems? Feed forward and feedback. Using one word, can you tell me the difference? Okay, feed forward is preventive, Then what is feedback? Very good. Feed forward is proactive and feed backward is reactive. Those are the two words I can simply use to explain feed forward and feedback. Proactive and reactive. In feed forward systems, you are trying to anticipate the variance. If it's sales price, material price, you're trying to anticipate the variance. And if that happens, what will be the course of action? You will be ready with it. If you anticipate a negative sales price variance, you are ready with it. Okay, how can I bridge that gap? Right? If you are going to face a negative adverse material price variance, what is your action plan? You are ready for it. You are anticipating the problem in advance. You are not waiting until that occurs. Whereas feed backward is the event or the negative consequence happens and then you give feedback. You look back and see, okay, what went wrong? What went wrong? Right? So where will the control environment be strong? Is it under a feed forward or a feedback system? Where will you have a strong control environment? Under a feed forward system, obviously you will have a strong control environment. You are anticipating the future. You are anticipating the future. So you explain the difference. Talk about feedback, feed forward, and what is the difference. And what are the benefits of using a feed forward approach in fireworks? Now you tell me the answer. If we use feed forward control in fireworks, what are the benefits to us? What are the benefits to us? Yes, what is the answer? What is the answer? If we use feed forward control, what will be the benefits? Okay, you're better prepared to face your variances to inefficiencies to whatnot. You're anticipating them in advance, right? So what will be the benefit? Your variances will be minimized, cost efficiency will be high, right? Yes, your planning variance especially between the original and the revised, right? You can try to mitigate that, minimize it. What else? What is the type of thinking pattern you're inculcating in the management if it's a feed forward? What is the type of thinking you are inculcating in the management if it's a feed forward? Forward thinking. You're making them more proactive, right? You're making them more proactive rather than being reactive. You don't entertain reactive decision making. You entertain only proactive, forward thinking decision making. Good. That is another benefit. So that will cause a lot of change in the organization. That will cause a lot of change in the organization. Managers will be trying to look forward rather than look backward. They'll be looking at the future and not the historical aspects, right? What else? Basically, you're saving a lot of time, right? By anticipating problems, by planning for it. When you face that, you know what needs to be done. There is no more time lost in facing those problems and consequences. Okay, minimal budgetary slack behavior. Yes, to a certain extent, yes. Right? So those are the benefits. You can also say you're better equipped to face problems, encourage managements to be proactive, things like that. Right? Okay. Yes, Fazlan, what is your question? So remember, when you answer similar questions, you've got to be quite specific, right? If we have a feed forward, do we need a feedback? Sometimes you might need, right? Sometimes you might need, most of the time you may not. It depends on the industry you're in, the product, the manufacturing or service you're into. It's subjective, right? It's subjective. Sometimes for things like maybe, uh, I mean, especially factors like external factors, very difficult to be captured under a feed forward system, right? Very difficult to be captured under a feed forward system. I mean, no one anticipated the impacts of COVID, right? The impacts of a huge exchange rate depreciation in the Sri Lankan context. No one anticipated, even though they had feed forward systems. Sometimes you've got to look back and say, look here, this is where we went wrong. We don't always plan for mistakes, right? Yes, feedback also holds for accountability. So therefore, the best thing would be to have a blend of these two systems, more towards feed forward, while having certain characteristics of feedback as well, while having certain aspects, certain characteristics of feedback control as well, right? But more or less, feed forward should be promoted. Feed forward should be promoted, right? Okay, any questions on section 1 and 2 so far on mock number 4? Any questions on section 1 and 2? Is everybody clear? Right, section 3. This is from your KYI. I little took a little bit of uh, time to see whether you guys have gone through the KYI. We can see that from your answers. Propose possible modes of expansion we can look into entering the South Asian market. Ideally, if you could list a few, finally recommend with justifications based on your thinking what would be the most appropriate method. Now we are in the European market, we are going to go into South Asia. How can we venture into the South Asian market? You list one, two, three, you list a few modes, ways of how you could expand, then give a justification saying what will be the best mode of expansion, what will be the best way you can expand into the South Asian market. So, what will be your answer? So, first tell me, list down how can we venture into the South Asian market? What are the possible options? What are the possible business models we can look into? Can you list them down for me? Can you list them down for me? Direct exporting, franchising, good. Franchising, what else? Joint venture, yes. Joint venture. Licensing, franchising, licensing, we'll take it as one. Strategic partnership with a local party there. What else? You could invest in a basically facility there and start your own operation. You could do a greenfield investment. You could acquire a company there who is in the same industry. Yeah, merger and acquisition, either by way of a subsidiary or an associate, right? So, Lorica, we are talking about the entire business model. How can we expand? Not specific to a warehouse, right? So, how can we expand, right? So, those are the modes of expansion. Now, out of these modes of expansion, what do you think is the best mode of expansion? And you should be able to justify your answer. There is no right answer here. You need to say what is the best mode and you should be able to justify it. So, according to you, what is the best mode? Franchising. You're giving your brand out as a franchise. So, that is what Chatur is saying. Basically, then you are getting only a royalty fee for your brand, right? So, you're totally allowing a third party to operate your brand. You might have brand guidelines to whatnot. No production cost, yes, good. So both pros and cons are there. So you've got to tell the examiner, look here, the pros outweigh the cons here, the benefits are better than the costs here, so therefore I would propose franchising. So you should be able to justify your case by citing, if it's franchising, these are the pros, these are the cons, I propose this because the pros outweigh the cons, right? So that's good. Others, what will you recommend? What will you recommend? No, no, no. We don't talk about the product. We are just looking at the method, mode of expansion. Simple as that. Right? What are we looking at? Possible modes of expansion. The question doesn't talk about the product. So what will you say? Look here, this is how we have to expand. This is how we have to expand. How will you say that? What will be the method you are proposing to expand into the South Asian market? Merger or acquisition, okay, you should be able to justify, right? You should be able to justify, right? So I might say joint venture. Why do I say a joint venture? You have a clear stake, right? You have a local expertise. They know the local rules and regulations, compliance requirements to whatnot. So you are more safe if you go for a joint venture. So if I was you, I would have justified the joint venture as the possible mode of expansion. As a possible mode of expansion. So you can agree on the percentages, find a local party, either a party who has a company in the same industry, or a party who is willing to invest with you, right? Even that is fine. So as long as you justify your case, justify your proposed mode of expansion, you get your marks. Don't worry, you get your marks. Right. Driving factors of demand in the outdoor grill industry. So you got to do a report. The report will have three sections. Driving factors of consumer demand. What are they? Can you list them down for me? What are the driving factors of consumer demand in the grill industry, outdoor grill industry? Yes, quality is not something driving consumer demand, right? Quality is something that is embedded in the product, which will drive the product demand. Here I'm talking about from the consumer's point of view. Why should the consumers buy it? What is causing consumers to buy your product? That is the question. What is driving consumer demand, right? Lifestyle, change in lifestyles, good. The social aspects, everything, okay. Everything comes under our lifestyles. Basically, the convenience, usefulness of the product. It need not be a trip, even for a party, to a gathering, to a function. You could use these products, right? Then the generation that's more towards exploring outdoors, right? Who are trendsetters, that will go a hike or a camping or whatnot, do a travel vlog in YouTube or Facebook, promote that. Then other people are also compelled to try it, then they follow the same. Then that is one of the main things which is driving demand in this industry, right? That is one of the main things driving demand in this industry. So in the previous mock we discussed building a brand. So we've got to take hold of people like that. That is the feeder market for us, right? When they go there with our product, do a review, do the vlog on YouTube or Facebook, the higher the reach, maybe we can repost them on our site, right? That's going to increase brand awareness, right? So in the video we could display our product brand as fireworks. So when in the video it's very visible, right? So we could repost them, things like that, right? Good. Immediate challenges which will adversely impact industry growth. What are the immediate challenges? Can you list down a few? What are the immediate challenges? If you had gone through the KYI, this is nothing, huh? If you had gone through the know your industry document, these are just few things I've taken from that, to see whether you guys are well versed in it. To see I don't get a lot of positive answers. What does that imply? You know it, right? So please go through that as well, huh? Try to bring in industry jargon, technical jargon into your answers wherever possible. It's not possible everywhere. Wherever possible, try to come up with those jargon to competitor brand names to whatnot. Examine a notes, then you put some effort, some additional effort to do a review on the respective industries, which is going to get you good marks, right? So please do that. Immediate challenges. So new technologies would fuel industry growth, right? Here is asking adversely impact growth. Adversely impact. Sampath, you've got to be careful in reading the question. New technology will be a better way of basically better for the industry. So here is asking which will negatively impact the industry growth. In the pre-scene, it says we are planned to grow at a compound annual growth rate of 5%, the industry. So what will object that? What will adversely impact on that growth? Can you tell me some answers? Existence of labor, very good, right? Skilled labor. We are facing a severe labor shortage. I mean, the global context I'm talking about, right? What else? Labor issues. Then what about sourcing of raw materials? What about sourcing of raw materials? Right? Sourcing of raw materials is a problem. Global inflation is a problem. Right? Then, okay, Lorika, your answers has to be very specific. Huh? Political, economic, and technology. That's a very general, I would say, a very general umbrella of words. So how is that related to our industry? Political. How will it negatively impact industry growth? Economic. Now, if you look at Sampath's point, global inflation, though that will negatively impact our product. Prices continue to go up. Then demand might, because we learned last week, our product has a elastic demand. So with prices going up, definitely we need to expect a reduction in sales volumes. We need to expect a reduction in sales volumes, right? So you've got to be very specific when you're addressing the question, right? You've got to be very specific when you're addressing the question. Good. Market opportunities we could capitalize on. What are the market opportunities we could capitalize on? Yes. What are the market opportunities we could capitalize on? Answers, please. What are the market opportunities we could capitalize on? Demand from emerging markets. So basically, we've got to cater to those emerging markets, right? Akila, the opportunity will be to cater to those emerging markets to capture the demand. That is the opportunity, right? To cater to the emerging markets to fulfill the demand. That is the opportunity. What else? New products with technologies like the smart grills. Right? If you go to the last two pages of the pre-scene, you see an article on smart grills. How the new variants have been introduced. What are the features? Technologies involved. Read those two paper articles. It's going to be very important for you. Right? Then what about capitalizing on our sustainability context? We can be more sustainable. That's another opportunity which will differentiate our brand from the rest. That will differentiate our brand from the rest. Right? Then coming up with outdoor packages. So we only offer the grill. What if we can offer the grill, a meal kit with the food required to be cooked when you are in an outdoor excursion, right? Then tents to other equipment required for an outdoor camping. So we offer a package of products. That is a new product development we could do, right? That is a new product development we could do. It's more than diversifying. I would say it's a product development, right? Because we are catering to the same market. We are catering to the same market. Same market, we are offering a new product. Under ends of matrix, you will see that as a product development. The same target segment, right? Whom you will be catering to. So to that segment, you're offering a package, right? Some might describe it as a diversification. I don't mind. But more or less, what I feel is, my opinion is that it's more or less a product development, because to the same market, existing market, we are giving a new product. We are giving a new product, right? So those tour packages, products, the packages which could be bundled up, right? To make your camping experience, hiking experience complete. What are the other requirements? So why don't you offer those products? Why don't you offer those products? Those are opportunities. Those are opportunities. We've discussed in detail. What are the opportunities last week also? What should we do to take fireworks to the next level of growth? To the next level of growth, right? Okay. So any questions on section 3? Any questions on section 3, guys? Are we clear on the points discussed? Yeah, so you have a video shared by Chaturi, so take a look at it. Good. It talks about the types of business models. Yeah. So basically, when it comes to expansions, to investments, to whatnot, how can you take your business out? What is the model you need to follow? What are the options, right? Okay, Chaturi will have to share something in English because you've got international audience as well, right? Okay, right. Section 4. So this is what we discussed last week, right? KPIs into the warehouse dashboard we discussed last week. Then actions in increasing our average selling price. What could we do further in improving profitability? So for first point, KPIs to include in a warehouse dashboard. Can I see the answers? What are the KPIs you will set for the warehouse dashboard? Inventory accuracy, is that a KPI? Inventory accuracy. Okay, we'll keep that for a moment. Others? Number of packing completed inventory days is the critical KPI. In your warehouse, it should be inventory days. You need to look at, okay, next production lineup is electric grills. Do I have inventory with me? Is the inventory days of the electric grill raw material plus? Meaning I have stock. Likewise, you have to be very careful. Inventory days. Human hours consumed per activity. It could be packaging to distribution, basically transferring raw materials to whatnot. Right? What else did we discuss last week? Percentage of waste. Yes, very good. How much of wastage due to improper handling by the warehouse team? Right? What else? Okay, inventory accuracy. I know that. What is physically available and against the system. Okay, we'll include that. Idle time of warehouse employees. Yes, you can include it. I mean, we discussed a critical KPI. What is that? Production lost time due to warehouse inefficiencies. Due to warehouse inefficiencies. So you can take production lost time, take a pie chart, show the reasons. What are the warehouse inefficiencies? So it could be a GRN delay. It could be a unavailability of raw materials. It could be a delay in transferring raw materials from the warehouse to the production facility. You can take a pie chart and map your reasons for the production lost time relating to the warehouse. That's a critical KPI. Inventory accuracy, inventory days, right? Then human hour consumed per activity, right? Good. All these are critical KPIs. You should say how it's calculated and why it's appropriate. Why it's appropriate, right? Actions suggest in enhancing our average selling price. So you know what our average selling price is now. We identified it as a strategic priority. So how can we increase this further? So we saw when we did the working from 2020 to 22 and the budget that it's coming down. There's a trend of coming down. So I want to increase this. So what can you do to increase your average selling price? What can you do to increase your average selling price? Yes, what can you do to increase your average selling price? Okay, basically more than electric bills, you talk about the current context. This is the sales mix. That's what's going to impress the examiner, right? Give the sales mix, give an indication of the current ASP, and say that we need to increase it. Below actions can be taken to increase it. So you can say we need to amend our sales mix to have more of electric and gas. Not only electric. If we can increase gas and electric both, we can increase ASP. Increasing electric grills alone is not practical. That is the highest price product, right? So why not amend your sales mix in the gas and electric grill both categories? So that will have an upward pressure on your ASP. That will have an upward pressure on your ASP. Increasing website sales. Yes, good. What else? Increasing website sales. Good. Right? Okay, how do we improve profitability? Final question. How can we improve profitability at Fireworks? What are the changes we've got to do? What are the changes we've got to do? Yes. Increase retail and agent base, increasing website sales, right? Increasing sales by promotion. Is that going to increase your profit? That will increase your sale. Sampath, that will increase your sale. Now you need to do a promotion also. There is another additional to your cost structure, the cost of promotions. You might have a ROI on your promotion, that's a different story. But still, is that going to increase your profit? To increase sales? Yes. But here we are talking specifically about profit. So don't only talk about sales. Yes. Talk about sourcing raw materials at lower cost. We need to look at more multi-sourcing options. Right? There are products like Frit where we do single sourcing, source from one supply. Why don't you call out quotations and get some better prices? Right? Then what about our working capital management? Can't we change to an aggressive from a conservative working capital management strategy? We can. We can. That's going to save you further costs like cost of overdrafts, cost of stock holding. Now your stock holding is 68. If you switch to aggressive, that's going to come down. It will save cost of stock holding, save cost of stock insurance, right? Save your overdraft, short-term financing, interest costs, things like that. So you switch to a aggressive working capital strategy. Increase sales via website, right? Then you review your cost structure, like your from your raw materials to the yeah, that's a good point. You can give more credit with low margins. Come bring down your margin and give more credit if your working capital is under control. Sounds good. Sounds good. Sounds a practical proposal. Then review of our expenses. See how we can do things better, simpler, and cheaper. If you look at our GP is at 42%. What is our operating profit? What is our operating profit margin? What is our operating profit margin? Guys, what is our operating profit margin? 9%. Yes, so 42 to 9%. What is causing that difference? Our operating leverage, higher proportion of fixed cost in our cost structure. What can we do to bring it down? Look at ways of outsourcing, right? Look at ways of having more contracted labor rather than fixed labor, right? You need to see, review your expenses. 42 to 9% is a huge gap. Lot of fixed cost in your cost structure. Very high operating leverage. So review your expenses and bring them down. Bring them down. That's going to put an upward pressure on your operating profit margin. At least bring it to 15, 20%. 50% of your GP margin. Right? You got to be careful there. Then, of course, you need to formulate expansion plans. You can't be serving the same market and growing over the years. You've got to look at new markets. See where you could expand. Like your product packages to product developments to market developments. What can you do? So that's going to expand your sale, expand your brand reach, ultimately impacting on your bottom line, higher profits. You're serving more markets, you're serving more products, product development, market development, right? So don't only look at the product's point of view when we talk about profit. Increase sales, change the sales mix. No. There are many items below your GP that is giving a negative pressure on your profit, like your admin expenses, selling and distribution, finance cost, right? So we have a huge operating leverage, a very high fixed cost structure. So you need to see what can we do to bring them under control so that our profits go up. So that our profits go up, right? So don't only look at the point of view of the product. right? See what else you could do to bring down your cost, so that ultimately your bottom line is positively impacted by higher profits, right? So is everybody clear on section 4 and mock 4? Mock 4 section 1 to 4. Any questions? Can we close mock number 4? I believe you guys got something out of it, right? So as I told you, try to learn something new where you can apply it into the coming mocks, right? So this week is going to be critical. You got to spend a lot of time with your pre-scene, spend a lot of time with your mocks, right? So we'll discuss it in the next session. So far, any questions on mock 3, mock 4 we've discussed today? Those who are joining for the free session, any questions on mock 3, 4 which we discussed today? I saw you guys have sent the email addresses. Our admin team will get back to you with the mock papers and the answers. Don't worry, right? What about the others? Any questions, any clarifications? If not, we can close the first half. Anything to be clarified, guys? Rest of you? Good. Right. Okay, guys, then. So, the free session, those who are joining for the free session, you guys have one more free session next week, same time, right? So, there we'll decide what we are going to discuss. So, I'm hoping to see the rest of you in our usual session, which will start in 30 minutes, right? Thank you very much.